and it's because the watch on my laptop is ahead. But anyway, it's fine. No problems. So let me share my screen again with you guys, and then we will finish off 2020, what's this, 15, and then see how far we get for 2014. Okay, so last thing that we needed to do was the general journal. Okay, so no, we did that. Sorry, did we do that? Yes, we did that. So we're on question 3. We were on question 3, and in question 3, what are they asking? Let's see. Okay, so let's see there. 3.1, it says record the following transaction in the general journal. All right, for March 2015, assuming periodic inventory system. Assume for question 3.1 only that is a VAT vendor. Narrations are required. Okay, so here they are requiring that we actually put in narrations. Okay. Narrations is, I'm being asked what are narrations, and narrations is this. If you can look on the screen, it is just a phrase of what is actually transpiring in the transaction. All right. We did speak about it in class the other day, but as always, revision is always great because then we obviously can bring that to our attention. Okay, so we have 2 transactions for that first 3.1. Says the owner J Hill took merchandise with a VAT exclusive cost price of 23,000 and a selling price of 40,600 for own use. Okay, so immediately we know when we see for own use and this is the owner, we know that it's going to affect drawings. Okay, and this was trading inventory. All right, merchandise or stock. So we know that, okay, we're operating under the periodic inventory system, so that's going to affect purchases and not trading inventory. Okay, and then finally, we know that to reverse the input VAT that we claimed when we bought these goods, we're then going to obviously then use output VAT. So drawings, we're going to debit it, but again, remember, drawings is the cost price inclusive of VAT. So we then calculate what is the inclusive of that amount, and there you can see I'm saying 115 or 114 over 100, and that's where I get that 26,220. Okay, then purchases we know is the VAT exclusive amount. Okay, if it was on the perpetual inventory system, it would be trading inventory, and that would be the VAT exclusive amount, so 23,000 again. Then obviously your output VAT is the difference between the two, and that's what we've done there. All right, and you see we're crediting purchases because it's going down, our trading inventory is reducing, and we are crediting output VAT because we know it's a current liability. Then under narration, you could have said owner took merchandise, or here we've actually mentioned his name, J Hill took goods for own use. Okay, I would have ended it at took goods or withdrew goods. All right, but that's perfectly fine. Then we go on to the 27th. It says the owner J Hill returned merchandise with a VAT exclusive cost price of 7,500. Okay, JV12 was issued. Okay, so basically we're reversing what we've done. Okay, purchases is going to increase, so we're debiting that 7,500. Input VAT this time. Okay, we're reversing some of the output VAT that we calculated by doing an input VAT calculation. Okay, and then finally drawings we are going to actually decrease. Okay, and we have to use the VAT inclusive amount on drawings. Okay, and therefore that's how we're coming up with 8,550. Okay, so that was part 1 of question 3. Okay, we move on to the second part and the last bit of this paper. And here they say, show the following transactions, show how the following transactions will affect the accounting equation, and enter how the accounts in the general ledger will be affected under the perpetual inventory system. Okay, so this is a great paper in preparation for your test because it's dealing with both the perpetual and the periodic inventory system. Okay, so here they're saying, remember to show the amount will increase with a positive or decrease with a negative. Okay, then the transactions. So let me scroll down. Okay, the transactions. They say purchased inventory to the value of 52,000, pay by EFT. Okay, so since we see EFT, we know it's the same as check, it's the same as cash. That's obviously going to affect our bank. Okay, we are losing money, money is leaving us, so we're going to credit the bank. Then we know what we were purchasing was trading inventory, so we're going to debit trading inventory because it's an asset and it's increasing. Okay, right. So under assets, can you see we have plus minus 52,000? Okay, because both of these accounts are assets. Then on the 7th, it says an amount of 2,500 to transport the inventory from the supplier to their premises is still owing to Jump Street Logistics. Okay, so then we ask ourselves which accounts then are going to be affected. Remember, we're operating under the perpetual inventory system. So since we're operating under the perpetual inventory system, we know that this is basically carriage inwards. Okay, and we know that carriage inwards, if we were under the periodic, would affect its own separate expense account. But since we're operating under the perpetual, what we're then saying is that, okay, cool, this is going to affect the trading inventory account. It's going to go to the trading inventory account. So we debit trading inventory because that's increasing, and then we credit creditors control. Why? Because now we owe as a result of that. All right, so creditors control is increasing, and we know when liabilities increase, we have to credit those liabilities. Okay, so that's a plus 2,500 under assets, and then a plus 2,500 under liabilities. Okay, cool. Then last transaction, it says the owner J Hill took merchandise with a selling price of 5,000 for his own use. Markup is 25% on cost. Okay, so here they want to test you on, do you know that we're supposed to use a cost price in order to record these drawings, all right, of trading inventory. So what we then do is we say, okay, cool, which accounts are affected before we get into the number crunching. We know drawings is affected, and we know that inventory is affected. Okay, and in the question, remember they said ignore VAT. Okay, otherwise we would have also had output VAT. Okay, so drawings, what are we going to do? We just incurred it, all right? In other words, it's increasing, so we're going to debit drawings because we know that according to dead click, we debit drawings whenever it occurs or is increasing. Okay, and then we know that trading inventory is decreasing, so we're going to credit trading inventory. Okay, then we say to ourselves, okay, cool. We know that our markup was 25% on cost, so cost is 100, and then selling price is 125. Okay, so then we say, what do we want? What we want is cost. Cost is 100. What we have is selling price, which is 125 times the 5,000, and what we get then is 4,000. Okay, as this is going down by 4,000, so negative 4,000 there. Owner's equity, all right, drawings is something that reduces owner's equity, so negative 4,000 there. Okay, right, and that is your paper on 2013. I heard something in the chat, so let's go there. So why do we calculate VAT on drawings? Okay, remember drawings is VAT inclusive. Okay, so here's why we want the VAT inclusive amount on drawings. We want the VAT inclusive amount because remember, drawings, we're saying the owner took something that initially we claimed input VAT on. All right. So this pertains to if the owner took something that initially had input VAT on it. So we're saying, look, when we bought this piece of furniture, we claimed input VAT. When we bought this trading inventory, we claimed input VAT. When we bought this stationery, we claimed input VAT. Okay. That input VAT, SARS paid over to us. But now since the owner is taking it for his own use, remember, and SARS allows us to claim input VAT because it's assuming, oh, since you're buying this for business purposes, no problem, we're going to allow you to claim input VAT. But now drawings is when the owner takes this stuff out for himself. We're not selling it. So SARS then says, no. The input VAT that you claimed under the assumption that you would be selling this trading inventory, under the assumption that you're going to use this furniture to decorate your office space, okay? We now want that input VAT back, okay? And the only way to reverse it is by claiming output VAT, all right? So that is why we then want to calculate the VAT inclusive amount on drawings and not just the cost exclusive of VAT. Okay. I hope that answers your question. Please give me a thumbs up if you are answered. If not, please do ask it a different way and I'll try and gather what you're saying and try my best to answer. Okay. Thank you very much, Mtabi saying. Okay. Awesome stuff. So that is 2015. Okay, guys. Again, if you have any questions, please feel free to ask. So now we're moving on to 2014. Okay, and I'm sure now you're starting to pick up that there's a pattern here. The type of questions they're asking. Can you see there in question one? We're not going to do it again. We're not going to do question one because question one. Oh, let me actually open the right papers because here I don't have the right papers opened up. So I said 2014. There's the suggested answers. 20. Okay, right. Okay. So you guys, again, you're looking at your past paper, all right, on your phone or devices. I hope you guys have shared it through the WhatsApp group as we are obviously discussing the answers. Okay. So question one, again, is your journal. And I just want us to read through the required, okay? But one thing that I picked up is that here they want you to do it under the periodic inventory system, okay? And they want you to do the cash book payments or cash payments journal. They want you to do the creditors journal. They want you to do the creditors allowance journal, and then finally the general journal, okay? And can you see the mark allocation as well? 40 marks. That's 40 marks out of what? 60 marks. Can you see what I was saying? You will not survive test 2 if you don't know your journals, okay? Right. So again, can you see something? There's no purchase, there's no trading inventory here. It's the purchases under the cash payment journal. Okay, I'm not going to go through this again because the last 3 papers that we've done were on the journals, all right? So there's no need to do that again. And then here, can you see we're in the creditors journal again? We don't have a trading inventory column, we have a purchases column. Okay. All right. And then finally, what else do we have here? All right. Oh, so I skipped something there. The creditors allowance journal. Again, we don't have a trading inventory. We have a purchases returns column. Okay. Right. And then finally, we have the general journal. Okay. All right. We have the general journal. Okay. So guys, please make sure that you do the journals, you understand the journals, and that it flows for you over there. Okay. And then we have the second question. There's only two questions, it seems, in this paper. And if you look under the required, it says use, required is on page 7, top of page 7. Okay. Use the relevant totals from those given above to complete the posting of the journals to the following general ledger accounts at the end of January 2014. In your answer book, provide the answer to the missing numbers and narrations indicated with A to J, as well as all your workings. Sorry. Okay. Okay. So here at least they've given you the structures, and literally all you need to do is to just fill in the rest. Okay. So let's scroll down to the answers here. So it will probably be like much like what you see here. Can you see there with A, they're testing what to put in the folio there? Okay. And total receipts means the money coming in to the bank, right? And that obviously then is your cash receipts journal. All right. So, and this is for the month of January. So that's why it's CRJ1. Okay. Okay. Let's see. Okay. Then you move on to B. They want you to answer B. Okay. And there you can see the calculations. How did I get B? Okay. I said 129,000 plus 38,480. All right. And then plus the sales amount of 262 460, and then plus that 151 900. Okay, so here actually this calculation is actually wrong. You should have just done the 129,000 plus the amount that you have there in sundry, which is the 151 900. Just those two amounts, because can you see the output VAT plus your sales will give you this 129,000. Okay, so this is duplication. Here we're duplicating the same thing. Okay, here we're duplicating the same thing. No. I'm actually wrong. It is actually correct. It is actually correct. Sorry, because these are the totals on those columns. These are the totals. It's not just one single transaction. My apologies, guys. My apologies. Okay, so yes, this is 100% correct. You should have this 581,840. Okay, my apologies. Then with C, okay, C we can now, that's the difference between the bigger side. Okay, what we have on the debit and what we have on the credit side. Okay, so with C we have, if you look on the credit side, we have 100,250, and we have that 760. Okay, that gives us 801. and 801,010 rand. And then on the debit side, we have that 581, which we calculated in the previous section. Okay, the difference is obviously then what you have as your balance brought down and your balance carried down. Okay, and there you can see that's the amount that you should have. Okay, right. Okay, all right. So this is easy if you have played around with posting from the journals to the general ledger. So here, output VAT, we go into the journals and we see wherever we had output VAT. Okay, wherever we had output VAT, we go into, we want output VAT, we know it increases on the credit side, so that's fine. But there, can you see, if you look in the folio, that would take you immediately to where you need to get this E. So you go to the G, you see there GJ4, so that's general journal. Okay, so we go to the general journal, and there they also gave us the date. They said 21 January. All right, so we look 21 January, what did we have? We had drawings. Okay, and there you can see your output VAT of 252. So there, all you need to then write is drawings. Okay, for E, that's drawings. Okay, right. Then for F, there you can see debtors control DJ4. That happened on the 31st. So let's go to the debtors journal. Debtors journal. Okay, output VAT is 48,440, and that's how we got that amount. And G, obviously, you're just adding up everything that you have there on your creditors control. On your output VAT on the credit side of your output VAT. Okay. Okay, awesome stuff. Right, then last account that we need to look at is your sales. Okay, your sales. There you can see bank, and we're looking for H, obviously. CBR for cash book receipts, also known as cash receipts journal. So we look, do we have a cash receipts journal? Yes, we do, on page 6 of 10. Okay. And that was for sales. So sales, if you look on the sales column, you have 262, 460. Okay. And that's what we plugged in for H. Okay. Then for I, again, in the folio, you see DJ4. So that's the debtors journal that we need to be looking at. Okay, and this is the sales. So we look for, right, and there you can find the amount of 346,000 under the sales column. So this was obviously, then your counter account would then be debtors control. Okay, contra account, sorry, would then be debtors control. Okay, and then finally, do we have anything else? Yes, we do. We have J, and J again is the total of all the amounts on the credit side. Whew, guys, that has taken the life out of me. That has taken the life out of me. So that is your accounting 2014 paper. Okay, they were shorter, I see there, fewer questions, carrying a lot of marks. That was 20 marks. Okay, just posting. That was 20 marks. Okay, all right, guys. So I'm not going to do 2013. All right, I'm not going to do 2013. I am going to do it with another class. So you will have the recording uploaded onto my YouTube channel. I will upload that before the end of the week, latest Saturday, but I think I'll do it. I'll definitely do it on Friday because I'm seeing them on Friday morning. Okay, so I'll upload that for you by lunchtime Friday morning. So you will have the answers to all the past papers that I've gone through, all right? I'll probably upload that to VC Learn, but please, guys, I'm begging you, don't forget that I was doing that on 14% and not 15%, which you guys are practicing. So don't get thrown off when your answers are slightly different. And again, remember that's my suggested answers. So again, there might be one or two things that might not be 100% right. So I'd actually prefer if you actually listen to these videos as opposed to just looking at the answers yourself, because then obviously I've corrected where I may have had a mistake or two. Okay, but that said, we still have time in this session. All right, so if any of you guys have questions, please can you ask them at this point in relation to anything that we've covered thus far. I know some of you wanted to speak to me yesterday. Now's your platform. Okay, if you are comfortable, you're good, I'm not going to hold you here any longer. You can depart. All right, please guys, let's practice, and all the best for your test. All right, so far things are going fairly decently with your tests. Sorry, your assessment one. Okay, so yeah, I still haven't gotten anybody that's failed, so I'm happy about that. Okay.